Hi, this is Kerry Artek with Wicked Stocks, bringing you the first in an indefinite series of daily reports on the SPY, symbol SPY. You know it, the S&P 500 Spider ETF. I'm going to be doing this analysis, a video analysis on a day-by-day basis. I already am on a weekly basis, the weekly SPY report. You probably already have seen that, or maybe have already seen that for the week ahead, in which I use weekly bar charts. Now I'm using daily bar charts, so the numbers are more precise because they're a day-to-day line studies, using really many of the same line studies. I did record this for trading day, Monday, October 4th, 2021. You're looking at a daily bar chart of the SPY going back, a couple of years actually, to November of 19, October of 19. You can see all the activity since then, since the COVID March low. You're probably familiar if you've been watching the weekly SPY report with a long-term trend line combing across these tops. It goes back over a year now to the August 20 high. It did hold about a month ago, as you can see on the chart. And it is now at 462.95. That's going to be a different number than you see on the weekly SPY. The weekly is an average of those 5 days, really. And so if you're a day trader or even a 3 to 5 day swing trader, using the daily chart will have more precision, will give you sort of an earlier start on pivot points, upside buy signals, downside sell signals, so forth and so on. Let's move on, and just to remind you, if you watch the weekly SPY, you know that based on this trend line across the tops, there is a channel bottom coming across the intermediate low that this week is at 411.15. So I'm going to call this area 411.15 to 462.95 sort of our floor and our ceiling into later October. Both of these levels can contain activity through that time frame. In fact, 411.15 could perhaps contain selling not only through October, but even through the rest of the year, and from there the market can turn higher and reach new highs over the following 3 to 5 weeks, couple of months at the most. 462.95 if tested. And I'm going to give you indications of when I would expect either of these points over the next week or two following a violation of key support and resistance. But I'll leave you with this image in terms of just sort of framing the parameters through October. We would, of course, have directional signals if we violated those points, but I'm going to be doing another daily SPY report tomorrow and the next day. These numbers will be updated, and so I don't have to get into the big picture stuff right now. Let's take a look at also, if you're watching the weekly SPY, there's an intermediate channel structure that we violated over the last week and a half. We closed below it, closed back above it, closed below it. It's still a legitimate day trade level, but I think it lacks directional influence, let's put it that way, other than the fact that holding below that 440.86 channel bottom does allow 411.15 possibly this week. There's no clear indication of that. Let me be a little more precise. Zoom in here and open this chart up just a bit, and you can see the same exact structures. I'm just zooming in a bit. I'm going to eliminate that middle structure and add a descending 1/3 speed line. This is a trend-defining line study I've been using for years. It's projected off the high from late August against Friday's low, which is the lowest the market had been since the August high. And you can construct a 1/3 speed line. It would take me 10 minutes just to go into speed line construction, but that is a descending 1/3 speed line, based on those two extremes. It's at 435.27 Monday, October 4th. It is a level that can contain daily highs, possibly into later week. The bottom line with the 435.27, below which the market remains highly susceptible to falling back again, not only today, but into later week. Not unless we actually violate to the upside 435.27 do I see short cover activity likely to yield higher trade into the lower 440s over the following day, 2 or 3. But until then, holding below 435.27, this market can fall back to new lows early in the week. There is a descending channel bottom today, Monday, October 4th at 421.76. And this formation is well equipped to contain weekly selling pressures. So, if we test it today, and that would be a pretty healthy sell-off from, Friday's 434.24 close. It would be, almost, it would be a 12 point drop plus. If, though, that happened, it can contain selling, let's say, at least into middle week, into Wednesday, into Thursday. We could get a nice pop off of 421.76, and perhaps for the week itself. So that's for day traders, it's a great level to trade. If you're short, to cover some short positions. If you're not positioned and you're itching to go long to buy weakness, to bottom pick, that's a good spot to do it for the day and into later week. And I might add that if we were to close today below 421.76, then we have a 1 to 3 day sell signal continuation down to that 411.15 channel bottom, which I say can absorb selling really through October trade. Let's talk upside. What if we happen to actually take that 435.27 level out? We could open above it perhaps. It's really close to the Friday settlement price. So if we push or open above it, we could get a nice short cover rally today, perhaps, possibly on Monday, all the way up to 443.62 to 444.64. So pushing or opening, especially above 435.27, 443.62 is attainable intraday. That would be a nice rally. Push us into let's just call it the mid 440s. 443.62 to 444.64 is nothing more than sort of a convergent channel top, as you can see, and a descending 2/3 speed line constructed identically as that 1/3 at 435.27, but just using the 0.66 pullback. Anyway, bottom line here, if we open above 435.27 today or push through it aggressively early in the day and we test 443.62, that is the start of a range of resistance up to 444.64 that can contain weekly buying pressures. And from there, the market can fall back through the balance of the week and into next. And perhaps, by that point in time, we're talking 411.15 over the next week or two, following a test of the 443.62 to 444.64 area. So that area up to 444.64 can absorb weekly buying pressures. And from there, the market can fall back and is free actually after that test to continue south to 411.15 within a week or two of that. But if we close today, Monday, October 4th, above 444.64, good low into later October, we should then, over the next couple of weeks, I don't think we'll do it this week, but by the end of next week, we could certainly reach up to that 462.95 trend line where, once again, the market can top out into November trade. I think for the day itself, giving you these precise numbers, there will be another report released tomorrow afternoon and each afternoon all the way through the week, giving you a report, apprising you of these levels and any new information that's worth reporting on. By the way, I'm going to be doing a free daily SPY report every day for a week or two. At one point, though, it will become part of the premium membership of Wicked Stocks, which is $24.95 a month. Not only will you get the daily SPY report, but you'll also get 2 valid, reliable, I think, and valuable stock picks every week. That will give you a 2 to 3 week to 2 to 3 month, generally a buy signal based on the violation of key resistance levels. That's usually what I'm doing. Sometimes I provide pullback support long term that you can buy weakness into, but I don't want to get too deep into that. Anyway, I think for the first report, this is the first daily SPY report for Monday, October 4th. That's all I really have to say, and stay tuned.